Hey everyone, this is Dr. Duru from the Market Breadth and Ahan Analytics. Exciting news, at least for me. I've been talking about Zoom video communications for a very long time, all year. I think I even started last year, anticipating some sort of meaningful breakout. I believe that breakout has finally occurred. You're looking at the chart for Zoom, ticker symbol ZM. I just marked off some of these key moments over time, starting with last year. I think the big turning point came here. I'm zooming in now on the chart. Came with this 13.0% post-earnings surge. The momentum and the price action and the buying momentum has changed fundamentally. The character and the behavior of the trading looks like it's different than before. But I needed that breakout to confirm it, and I think we have that confirmation here. Today, Zoom gained 2.2%. This is the breakout point above an important, although approximate resistance from 2023. I am already in the stock. Of course, I am not predicting or forecasting any particular outcome out of here, but just that I think my risk of holding this position has gone down significantly with this confirmation and this validation. Now, of course, my excitement will plummet and be invalidated if this entire move and breakout gets reversed and Zoom closes below resistance. So that's the first one. Now, on the bad side, home builders took a tumble. Now, I am not surprised by this. And if you've been following my readings, and again, I encourage you to check me out at drduru.com/122/blog. 122 is all one word. I am a perma bull on the home builders. I love the housing market as a place to invest on the stock side in particular, but I just have failed to understand why the momentum has continued as long as it has and why the excitement took another step higher. Yes, of course, the Fed cut interest rates, but that was already baked in when this breakout happened back here in anticipation of those rate cuts. Anyway, all that to say, in my last post on the market breadth, I pointed out that for the first time since the summer, essentially, ITB, this is the iShares US Home Construction ETF, set up bearishly. And what I mean by bearishly, well, it closed first below the 50-day moving average, which is this red line, and then confirmed that breakdown by a lower close. And lo and behold, we had a huge gap down day today. ITB dropped 2.9%. It is definitely breaking down in bearish mode, particularly given this is happening just on the heels of breaking out to an all-time high here. Now, what caused this move was an awful earnings reaction to DR Horton, ticker symbol DHI. You can see that buyers took advantage of this of the initial panic that took DHI all the way down to 153. Even as a perma bull, I didn't want to take any chances. I didn't try to day trade this or anything. But notice this huge jump up, 14 points. I mean, this is almost a 10% move from the very bottom. But that tells you that given DHI already closed, still closed down 7%, it was a big, big drop. This to me is a change, just like Zoom experienced a positive change in the trading structure. I think home builders now have a negative change in their trading structure. So yes, this bounce is fine. It will probably last as high as the lower Bollinger Band, which is this black line that the Bollinger Band defines the approximate price volatility around the 20-day moving average. But I don't think a rebound will last enough to say fill the earnings gap or to return home builders to a bullish posture. I could be wrong. And again, I write about this. The seasonal strength of home builders relative to the stock market starts typically around October, November. So I will be looking to see whether that kicks off on time. But right now, I'm not looking for it. But of course, I'll keep an eye on it. And again, check out my blog for more timely updates on this. Now, I've been long promising a series of charts to show what I'm calling some turnaround stocks. Now, overall, my trading call in the market is still cautiously bearish. And again, I write about this in the blog. But there have been so very few good risk reward entry points to express that bearish condition. So I've done a lot less trading and I've done a lot of watching and studying instead. And ironically enough, I've been watching and studying and sitting in some stocks that I'm calling the turnaround stocks. Now, what do I mean? Well, one of my favorite ones is Lululemon. It was a very bearish stock for a long time. Let's just take a quick review. You can see 2024 has been an awful year for Lululemon. They're an athleisure gear maker. Lots of competition has been stepping in. You had huge signs right here. This is like classic technicals. This 50-day moving average essentially signaled the beginning of the end uh, for Lulu. Sure, it gapped up ahead of its earnings, but that was a false signal. And sure enough, once Lululemon gave it up, and what was this, a 15.8% plunge, that was all she wrote. Again, fundamental change in the trading behavior of this stock. Went all the way down, dropped to low in August. There was nothing really here to say, hey, I'm going to call a bottom. But once it got back above this 50-day moving average and held that support for so long, it became what I call a turnaround stock. And sure enough, this last steady, steady, steady. You can't count in this position. I anticipate taking profits by next month. Now, what's another example of a turnaround stock? Well, this one is an ironic turnaround stock, which is Cracker Barrel. It's a restaurant, kind of a brunch, breakfast type place, predominantly in the southeast region of the US. Earlier this year, I was calling a bottom. The bottom didn't quite hold up. I got out. But now it's a turnaround stock because it clung to support after a post earnings fade. So this is kind of hard to see. Let me see if you can see it better when you zoom in. Cracker Barrel, CBRL, gapped up higher and then it fell back down. So this was should have been a bearish fade, but notice how neatly and tidily it held the 50-day moving average support. That is fantastic. And then so once it jumped here, this is basically 5.9% gain. That was all I needed to see. I jumped back in. The stock drifted back down again. Didn't quite test the support, but it bounced back up. So this is very constructive behavior. It would be great if it could get back to where it even started the year. I'm not counting on it, but I am hoping to hold this for an extended turnaround time frame. Now let's take a look at another one. This is another stock. I am not in this one, but I'm sorry, I did get back into this one, but this is a stock that tricked me. And this is an important lesson about trying to trade turnaround stocks. TDC, Teradata Corporation, is a very old hardware company that's trying to transition into the cloud. And, it's been really rough going. They have some tough competitors. But what I will show you here is once the screen comes back on, sorry about that. I got out, and this is one of the rare times where I don't like to sell on a panic, but this is one of the rare times where I had to bail on a position right at the lows. It gapped down post earnings 14.1%. I finally had just had enough. And clearly, pretty much every other motivated seller did the same, and that carved out the bottom. But I stayed disciplined. I did not take the bait until TDC got back above its 50-day moving average, and now it looks like a turnaround stock once again. It sort of fully reversed that post-earnings loss, and it's drifting higher. So this is much more constructive. I'm much more confident that TDC will survive future earnings periods. The company is probably getting its messaging right, but we'll see. We'll see what happens at the next earnings report. And you can see, let me just scroll out here. You can see that actually TDC has had a rough time since its pandemic peak, but it's just been bouncing all over the place with no direction until now. This year has been mostly down. Okay, one last one. This one is a little harder to see as a turnaround stock. This is Snowflake. It's really struggling to hold on to turnaround status. It gapped down and lost 14.7% after last earnings, drifted lower. So, I mean, there's nothing that's all that convincing. I am in snow. I am clinging on to it as a likely turnaround stock, but it's not quite qualified yet because it did break below the 50-day moving average again and is only barely meekly climbing back above it. So if it can get to a new high and get above this, and then finally completely reverse the last post earnings loss, then I'll be a lot more confident that this is a turnaround. But this is a trade in the making and a trade underway. So thanks for checking me out. I'm Dr. Drew, otherwise known as the Market Breath. Sorry, I misspelled it there under my captions. And I work with my own data analytics consulting company called Ahan Analytics. So subscribe, put some feedback in the comments. If you have any questions, I'll answer them. Otherwise, you can also follow me here on YouTube or go to my blog, drdrew.com/122, all one word /blog, to check out more timely commentary on the market. And you can also subscribe to my blog for free over there. Take care. Thanks for watching.